Well, howdy there folks, and welcome into today's video. Hope you guys are doing great out there as always. I am heavily invested into a stock in which I have some very bad news to disclose here today about, okay? There's definitely some good news we're going to get into, but we're going to get into the bad news first. It's regarding an investment I have called Planet 13, okay? It's a stock I have tens of thousands of shares in. It's a major investment for me.
Why Trulieve and Planet 13 stock will never be like Tattooed Chef, TTCF stock.
Well, holy smokers, folks, this ain't no dang joke as the chef is moving up big here today, and do I have some big news, okay? I have some big news to share. You will not see what I'm about to share in a press release or anything like that right now, okay? This is some real news on the DL, and I want to frame this properly and explain to folks why this is such a big deal, okay? Now, first off here, the chef making a very, very nice upward move here today.
Cannabis stock burns hotter than plant-based meat stock. Cannabis stocks have been on fire lately. Both Trulieve and Planet 13 stock are up over 80% in the past 5 days. That's despite oil price surging. Commodity prices are making a comeback. True inflation is back. And Treasury long bond TLT is struggling, while the Fed is continuing to raise rates. Macroeconomy is not suited for consumer discretionary industries. Interest rate is high, consumer savings are low. In this video, I will share my thoughts on why Trulieve and Planet 13 stocks will not be sharing the same fate and be bankrupt like Tattooed Chef. I will explain it all right after this.
How you like that?
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? Despite the fact that both Tattooed Chef and Planet 13 are Jeremy's financial education's small cap top picks, Jeremy has made a lot of videos talking about each of these companies.
I mean, Chef's having a great day today, but that could be one day. The gains could be gone tomorrow. You never really know. Obviously, I'm a long-term investor in this company. I'm planning to be in this stock for years to come in the future.
Lies on top of lies on top of lies.
I hope you just enjoy my truth and my transparency when it comes to a situation like this. All I ask in return is that you smash that like button. That's literally it.
There are completely different reasons why they are unprofitable today. In regards to Tattooed Chef, CEO Sam Galletti has left and sold us out, but Tattooed Chef's products are plant-based, which are coming from the ground, and it's completely legal. They don't have any issues in that department. What they have is a demand issue. The demand of their products are weak. A lot of reviews on YouTube, people are saying they only bought it because of the food is on sale and they won't be buying it again because it didn't have enough flavor. Compared to Planet 13 stock, which is making a comeback for this news, I will be sharing with you shortly. Compared to Mary Jane products, Mary Jane has no demand issue. The reason why they're not profitable is because of how much taxes they had to pay to the government.
So you want me to buy this place so I can pay taxes? I'm a criminal, yo.
Yeah, and if you want to stay a criminal and not become, say, a convict, then maybe you should grow up and listen to your lawyer.
Right.
According to Trulieve, 10K listed this IRC Section 280. ECHO prohibits cannabis businesses from deducting their ordinary and necessary business expenses. That is huge if you don't already know. They are being forced to pay higher effective federal tax rate than similar companies in other industries. The effective tax rate on a legal cannabis business depends on how large its ratio of non-deductible expenses is to its total revenues. Therefore, businesses in the legal cannabis industry may be less profitable than they would otherwise be. Furthermore, although the IRS issued a clarification allowing the deduction of the cost of goods sold, the scope of such items is interpreted very narrowly, and the bulk of operating costs and general administrative costs are not permitted to be deducted. If you check Trulieve tax rate, they are paying 89%, compared to Apple is paying 12% for the quarter ended July 2023. How are you going to be profitable if you're paying 89% of your profit to the federal government? On top of all the lobbying fees Trulieve has been paying, no wonder they are packing on so much debt. So how this Section 280 was started? It all dated back in 1975. Jeffrey Edmondson, a drug dealer based in Minneapolis, filed his taxes as a self-employed man in the illicit drug trade. He had a good year. He sold 1.1 million Blue Magic Crystal, 5 ounces of Coca-Cola powder, and 100 pounds of cannabis. Like any other God-fearing, tax-paying American business owner, he wanted to deduct standard business expenses. The Internal Revenue Service denied all his deductions in an audit, but in 1981, Edmondson fought the decision in U.S. tax court and a judge sided with him. However, in 1982, Congress took aim at drug dealers like Edmondson and enacted 280E, a tax code that prevents businesses that traffic Schedule 1 or Schedule 2 controlled substances, which includes that stuff what Jesse Pinkman took, Mary Jane, Coca-Cola powder, and Blue Magic Crystal, from claiming standard business deductions. Today, cannabis retailers must pay taxes under 280E. This tax code essentially makes cannabis companies pay taxes on gross revenue, a huge financial burden to bear for most small businesses. The effective tax rate could be anywhere between 60% to 100% of profits, depending on how a company is set up. Vivian Eazzy, an analyst who covers cannabis, describes 280E as an onerous and punitive tax code. Henry Wachowski, a former federal prosecutor who made a name for himself defending cannabis companies against federal enforcement, he is a veteran cannabis tax lawyer who has litigated over a dozen 280E cases. Says it's not worth trying to fight the IRS on 280E anymore. Basically, the tax court has sided with the IRS and there is no meaningful relief for 280E, says Wachowski. The inequitable taxation of the legal cannabis market is what keeps the illicit cannabis market alive, he says. If the taxation was equitable, the street dealers would go out of business. For now, 280E is a moneymaker for the IRS. So what changed? Why is cannabis stock all of a sudden shooting back up again? The Department of Health and Human Services this week recommended that cannabis be removed from the category reserved for the riskiest drugs, such as what Jesse Pinkman took, and move to one for certain prescription drugs. The decision to reclassify Mary Jane ultimately resides with the Drug Enforcement Administration, DEA, which could take months to complete its evaluation. Section 280E only applies to Schedule 1 and Schedule 2 substances. Moving cannabis to Schedule 3 would eliminate one of its business's largest hindrances to profitability. At a time of major price compression and increased competition, squeezing margins to the point where turning a profit is virtually impossible for most businesses. Eliminating 280E would be arguably the single most impactful federal reform for the cannabis industry. Multiple requests to reschedule Mary Jane in the past have failed. Most recently, in 2016, the Obama administration's DEA denied a request from 2 Democratic governors to change the classification. At the time, the DEA cited concerns that cannabis had a high potential for abuse, no accepted medical use in the United States, and lacked an acceptable level of safety for use even under medical supervision. Experts predict this time will be different. This week's HHS recommendation became public nearly a year after President Biden. In a presidential first, asked the health agency to evaluate whether Mary Jane should be reclassified. If the DEA follows the health agency's recommendation, cannabis would be placed in the same category as anabolic steroids, ketamine, and testosterone, which can be obtained with a prescription. Historically, the DEA has never overridden a HHS recommendation. It seems probable that cannabis will be moved to Schedule 3 sometime in the next year, quite possibly right before the 2024 presidential election. Under the Controlled Substances Act, the Schedule 1 category is reserved for drugs having a high potential for abuse, with little or no accepted medical use. HHS is recommending Mary Jane be moved to Schedule 3, a designation applied to drugs with moderate to low potential for physical and psychological dependence, and some medical value. There is some legitimacy being brought to our industry, and frankly, for the millions of people who use cannabis as part of their personal health journey, said Kim Rivers, founder and CEO of Trulieve, one of the nation's largest cannabis retailers with 186 dispensaries in 10 states. The financial impact of reclassifying Mary Jane, especially for small businesses, will be profound. It almost immediately overnight turns good operators into profitable businesses, whereas before they were fighting and dripping for every bit of revenue they could get. Once reclassifying is done, scale would be very important, because the economic of scale can increase margins and profitability. Tattooed Chef and even Beyond Meat doesn't have a scale. That's why their margins are negative. While the real food giant have good margins, Trulieve have 50% gross margin even before rescheduling. Imagine their margin afterwards. Plant-based food company have negative gross margin. It's mostly because people don't want to eat that food. It has no real demand, but Mary Jane is also vegan, but she is smoking hot. You are such a good boy for watching my video right till the end. Bye.